Hello, what's up, guys? This is another eToro walkthrough of the eToro app, trading app. Today, we're just gonna go through how to pick a stock, what you need to look for, what you need to know, and just a little bit about CFDs. Okay, so let's get to the portfolio. Let me just scroll down and check some of the stocks that we have. Okay, so let's pick something familiar. I think Apple. Let's just type in Apple. Click Apple. Okay, Apple, the market is closed at the moment. Okay, click trade. So the market is closed at the moment. Let's just pretend that it's open now. Okay, and you want to place a trade on Apple, or you want to pick the Apple stock. Okay, so you can see the price is 124.84. Okay, this is the market closing price. So when the market closed yesterday, this is the closing price, 124.84. So let's pretend that this is the market price at the moment. Okay, let's pretend it's open. So when you place an order in eToro, you can set the rate at market price, it says here, or you can click this rate here and it gives you the rate. So what's the difference between the two? So at market price means that when the market opens, here in the UAE it's 3 o'clock, so it opens 5:30. So when it opens 5:30, the market price will show here on the screen, and it continues to fluctuate, right? So when upon market price, it will capture the rate that's on the market. You get that? So, and then it will place a trade. So if, let's pretend the market price is 124.84, and you placed a bet of 124.84, or this is the money that you have in your account now, 124.84. So at market price, at 124.84, eToro will capture that market price and put your trades open on the market. Okay, if you set rate, click here. If you set rate, let's say you're thinking the 124.84 is a lot, and you think Apple stock will go a bit lower, so you set your specific rate as per your own preference. So you think Apple will go down 124. All right, so you put 124, and then you put 124 amount. As you can see, it says 1 unit. Your exposure is the same, $124.13 of your equity. And that when you click set order, it will set that order immediately, but not until Apple price goes down to 124. So when the opening price is 124.84, and it keeps fluctuating, so it will not automatically open that trade for you. So you have to wait for a few minutes, few hours, it depends. And then once that stock price hits 124, then your trade will be open in the market. Okay, so that's just what that means. All right, so I'm just gonna go here quickly. Left, on the lower left side, you see stop loss. Stop loss means that if you lost this amount of money, then you will automatically close your trade. That's just what it means. Okay, so you can place the rate here. You can say that $100. Yeah, $100. That means negative 24. So you've lost $24. Okay, so if the stock price goes $100, then you will automatically close your trade because you already lost $24. That's just it. X1 leverage. All right, let's go through quickly with this one. So in X1 leverage, you are buying this stock as an asset. So you actually own the stock. But if you click X2, it changes, right? It says CFD trade, higher leverage means higher risk, right? X5, it's the same thing. Now, what does that mean? If you go back to X1, it says, if you notice on the amount, on the bottom, it says 1 unit, exposure, $124.13 equity. If you click X2, it changes, right? It amplifies the amount that you spend or the amount that you put in the market x2. So now you're exposed to 2 units, $248. X5, now your exposure is $620, which is 5 units. So it just multiplies the trade. So what that means is when the markets go up or the market prices go up, if Apple stock goes up at least 5%, 7%, or 10%, even 10%, then that means it will be amplified times 2, times 5, depends on the leverage that you use. All right. But if it goes down as well, 5%, 10%, then it will be amplified down x2, x5 as well. So it depends on how much risk you're willing to take. I mean, you're about your risk appetite. So you have to check that with how you want to trade. And so I have to learn that as well. So it depends on you. So let's go to take profit. Let's change it to X1 first, so you won't be confused. Take profit. All right, let's go to rate. All right, take profit means that you will automatically close the trade when you see the profits on your account. Okay, so if Apple stock already has profited, so it rose 5%, 10%, whichever. So let's say you put the rates. It says rate here. So let's say 200. Let's say 200. You can see the take profit number changes to $76. That means you already have profited $76 in that whole trade. So whether on that same day that you open that trade or the next day, the following day, following weeks, once the Apple stock price goes to the rate of 200 and you have the $76 of profit already, then eToro will automatically close that trade for you, and then you get your money. That's it. All right. No TP. Yeah, you can set to no TP if you want this. So that's it. I'm not going to elaborate more on the other things for now, but I hope that's simple enough for you to understand and how to open a trade, and what things you need to look for, and things that you need to know before and after you open a trade. So now the market is closed, and so we'll wait for another 3 hours for the market to open. So I hope you enjoyed this video, and I'll see you guys next time. Thanks for watching.